You were listening to Charting Wealth for Wednesday, the 21st of September, 2016. Let's jump right into the markets with the 10 minutes that you're giving us. What do we have? IYY. It's the iShares Dow Jones U.S. Total Market Index Fund. It tracks the whole market. What is the whole market doing? Well, we had a double crossover on our weekly and our two-day trend lines back around the 13th, and the market moved down strongly that day and has been going sideways for the last three two-day candles. We actually only have the first day of a two-day candle on the 20th. It will complete on the 21st of September. Why is the market sliding sideways? Well, there is a big Fed meeting going on, and on Wednesday, they're going to make announcements about what might happen with the interest rate on the Federal Open Market Committee. What is the market waiting for? What they're going to say. That's going to have a huge impact on what the market may or may not do. Currently, the market is in a confirmed down move, the overall market, starting back on the 24th of August, moving down at that point, actually slid sideways for a little while, and then huge down moves on September the 9th and again on September the 13th. Market is in a holding pattern right now, waiting to see. If you made money off the big down moves, hopefully you have cashed some of that out. Again, when we say cashed out, we're talking about virtual trades. We're not a stock calling service. We encourage you to open a virtual trading account at any of the online brokers and get busy practicing with us. Once you get good at this, you can do it on your own, make your own decisions. So what do we see going on? Well, we have broken our two-day trend line. It has been broken. So the market is still in a confirmed down move, but has headed up some over the course of the first day of the two-day candle. Derivative oscillators lost some of its down energy, and the MACD signal line both are still moving down. So the market is telling us it is in a down mode at this point. Let's take a look at the 4-hour chart. It, of course, pulled back. A pullback is when the charts move in the opposite direction of the big chart, that is the short chart. It pulled back on the the afternoon of Friday the 16th. So we're in currently pullback mode. If the market does roll over, go back under the two-day trend line, crossover going down, that would be a point for you to jump in and ride the wave after the Fed meeting, after they make their call. Continue to pay attention to the charts. Practice jumping in at the right point. Again, you want to make sure a candle closes before you have a confirmed crossover going down. We'll see how the market goes. The market may zoom tomorrow. We don't know. That's why we're waiting. We're going to trend follow. Do remember, on the total market and the S&P 500, they are both confirmed down moves on the weekly chart, having crossed over on the MACD and the signal line, and the two-day chart. Okay, let's quickly move on. We're going to the S&P 500. Oh, by the way, IYY up just fractionally, 0.02%. The S&P 500 not up at all, actually just even, 0.00. It just went sideways. It too broke the two-day trend line. Still, we see the derivative oscillator heating up, moving down, and the MACD and signal line both down. If we look at what's going on in the 4-hour chart, we can see that we have a backup actually did occur. Didn't quite happen over the last couple of days, but did move over in the morning on the 20th. So we're in a backup territory. When it crosses back over going down, that's your entry point. And we can see that when the market closed out, it actually closed out below the two-day trend line on the 4-hour chart. That's important to keep in mind. So watch for potential entry points after the Fed makes its call. Will there be entries? We don't know. We're going to wait and see. Remember, we trend follow. What's going on with the Qs? Well, the Qs still in a confirmed down move on the 4-hour chart. The two-day chart. It is in still a confirmed up move on the weekly chart. So keep that in mind. Two-day trend line has been broken all the way back on the 15th of September. Now, if we take a look at the 4-hour chart, what do we see going on? Well, a backup is underway. And again, don't forget, we're still in a confirmed down move, even though the 2-day trend line has been broken. If we have a rotation back over, that could be, again, the ability to get into a down move on the Qs, the NASDAQ 100. When we say down move, again, for those of you who haven't listened to our inverse ETFs, how to make money when markets crash, how to make money when markets crash, you need to do that because it will explain to you what inverse exchange traded funds are. They actually move in the opposite direction of something like the Qs. QID actually moves in an opposite direction of the Qs. I'm going to actually put that in for those of you watching on video. Those of you listening, I can tell you it shows that it moves the complete opposite of the way that the Qs moves. It is the UltraShort. It's put out by Proshares. So there is the ability to make money in the markets when they move in opposite directions with inverse funds. So remember that as you get a little more sophisticated in your practicing. All right, now we're going to go lastly to gold. What is gold up to? Well, gold's in a confirmed down move on the 2-day chart. It did move up over the course of both Monday and Tuesday. Gold was up over the course of Tuesday 0.10%. Still hasn't broken the 2-day trend line, however. Derivative oscillators the same on the newer 2-day candle. Again, just the first day of the 2-day candle. It will complete the 2-day candle at the close of the market on Wednesday the 21st, but still below the 2-day trend line. If we look at what gold's doing on the 4-hour chart, what do we see? Well, the 4-hour chart is still in a confirmed down move. That backup has not occurred yet. But again, those of you who are trying to use the 4-day chart as your total trading chart on gold are not doing too poorly. Gold has actually been working for the last several moves on our 4-hour chart. What does that mean to you? Well, if it crosses over going up, you might consider jumping in. Just remember, though, that gold isn't a confirmed down move on the 2-day chart. And when we look at the weekly chart, it is technically also in a confirmed down move, crossing over going down back on the 19th of August. So if gold does move up, just be aware that all things being equal, the markets always tend to move in the direction of the largest chart or charts. And those two larger charts, the 2-day and the weekly, are going down. So that move in gold, if it is up, it might be, and again, might be, short-lived. That is where we are at the close of the day on Tuesday the 20th. We get ready to go into the market on Wednesday the 21st. We always appreciate you being with us. Hope you found this helpful. If you appreciate what we do, you can really thank us by going and subscribing to our podcast at iTunes. We actually have 2 there. We have the weekly review and forecast in video format, and we have the daily podcast in audio. Please do that. You can also sign up for our newsletter. We will send you the video podcast every day. We'll actually email it to you. Plus, you'll get our How to Read a Stock Chart video link. You'll get our daily worksheet, and you'll get the layout that we use at freestockcharts.com. We appreciate you being with us. You have questions, problems, concerns, let us hear from you. And again, go to iTunes, subscribe, give us a 5-star rating. That helps us in the metrics so much. Also, go to YouTube, go to our Charting Wealth channel there and subscribe to us. We very much appreciate you being with us. Thank you so much. God bless. Hope that you are learning lots from what we do. Take care.